Mary Therese Yamamoto, and she's the owner of MTY Bookkeeping, Inc. And this is the second workshop, I guess we want to call it, that she's done virtually for us. So the last one was more specifically for artists, but this I think can work out for any type of small business, Mary Therese, right? To get your books in order for the end of the year.
Yeah, yeah, mainly
Okay.
to give you some tips and not get you organized before the end of the year so that you're not so caught up in the overwhelm and running in circles. And at the end of this too, after I talk to everybody, I'm going to create a checklist that caters towards everybody's needs and, has a little bit more specific towards what the audience has rather than just a boilerplate one. So I'll talk to everybody individually and get an idea of where you're at and what you might need on an individual level. And I can make a checklist for you to send out. Again, I'm Mary Therese Yamamoto, and MTY Bookkeeping Inc. has been in business now since 2008. I started off on my own, running around the city, running into offices and reconciling people's bank statements and filing their sales tax and helping them start their businesses, mainly with interior design, and then expanding to some creatives. And I've now built that business and have an office over in Wappingers Falls. And there are 9 of us in the office right now, and 4 VAs and 2 off-site workers. So we've been growing. It's been really, really amazing. And my goal is to help others and get more financial clarity. And also, I am really good with the numbers, and I like working with creatives because a lot of times they are not. So it's helpful for them to be able to do what they love to do and be comfortable knowing that they have somebody in their corner taking care of the business side. So, and with that, I will get started on the year end. I can't believe we're already here at year end, but here we are. Just want to make sure everybody can see this. Okay, great. All right, so sorry, I keep getting all these spam calls on my phone. All right, so year-end tax, I'm sorry, I'm having an issue with my screen. Hold on one moment. Okay, year-end tax bookkeeping tips. And we can all still see this? Yes, great. Organize and prepare for a smooth close out. All right, and why year-end bookkeeping matters. So proper year-end bookkeeping, it's not just about compliance, it's about positioning yourself to have strategic growth and financial clarity. It's a nice little organizer to keep you going and making sure that you're straight for the year coming. It actually is a huge relief, I find, for people when they have all of that taken off their shoulders and they know that they've already got it in line and organized and ready to file, honestly. My goal is to have people filing on time each year. So if you have these steps taken care of before you even hit year end, you're in a good spot. Accurate books reduce tax time stress and ensure full compliance, sets a solid foundation for informed business decisions, and it avoids costly mistakes and missed deductions too by preparing early. So tip 1, lock the previous year's books. And a lot of times I like to say, make sure you did do last year's books, because I have had recently people come to me say, I didn't even finish 2024 yet. And I said, well, we're at the end of September, so you've already missed the first deadline and now the second extension deadline. Let's get stuff in order. So if you had any final adjustments or anything for 2024 or the year prior, you want to make sure that's in line. If your accountant had given you any adjustments they wanted, any tax prepayments that needed to be made, you want to make sure those are taken care of as well. If you are using a database, something like QuickBooks, Xero, Wave, FreshBooks, review the balance sheet and take a look at any unusual numbers you see in there, any discrepancies, any question mark type things, and highlight them. And then lock your files. So there's ways to, just make sure that your info is protected. you can put it away in Dropbox. If you are a paper person, make sure that you have that in a safe spot so that it does not get damaged. And tip 2, reconciling monthly and especially the December accounts. So we're reconciling every month ideally and making sure that there's no mistakes, discrepancies, making sure that everything that has been received on your bank statement is reflected in your database or on your spreadsheet. You want to make sure to clear out any old items, things that aren't valid anymore. You wouldn't believe how many times you go in and see things from multiple years past that just were never reconciled. So it's important to just make sure that everything clears out on your bank reconciliations. And if you have questions about reconciling banks, we can talk about that too. I just find that putting some time aside, maybe once a week or once every 2 weeks, make it some special time, sit there and just go through the bank statement. I do it at 7:30 in the morning on Saturday mornings. It's my thing. I put my coffee out. I take a look at those numbers. I take a look at the accounts that I might separate my funds into and make sure that everything's kosher. And it's just a nice way to clear my head and know that I'm good for the week and the month ahead. And again, staying current, regularly monthly reconciliations do catch errors. So you want to make sure those records are accurate. There's a suspense and uncategorized accounts in a lot of databases like QuickBooks, Xero, and FreshBooks. Suspense account is an account that you cannot have something sitting on. So that's an account for something. I don't know what to do with this, but I'm going to put it here for a second until I can assign it to the right thing. So we want to make sure suspense is always at 0, or it's an in and an out account. And then reclassifying transactions, making sure that things were classified the right way. Sometimes there's different deductions by year that are legal. So we just had that big, beautiful bill pass where a lot more things are deductible and others are not able to write off, or certain meals you're not able to write off, certain things like work clothing. For presentations, there's different write-offs for things like that. Travel is also a different write-off. So you want to make sure that the things you have coded are coded properly. So it's a good time to make sure that you have that done. Uncategorized too. QuickBooks has this uncategorized section, which I just don't even like that it's a thing. I'd rather you find out the category and just post it properly, but it is what it is. That's just one of those things for bookkeepers to stress about at the end of the year. So try to make those things resolve, please. Reviewing payroll and employee expenses. So if you do run a payroll for your company or run it for yourself even, you want to make sure that your payroll provider has all the correct information to get the W-2s out on a timely fashion at the beginning of the year. Everybody's addresses are correct. Your deductions are what they should be for your W-2s. So you want to make sure that your federal deductions are correct, your state deductions, anything that you had, if you were having extra claims out. If you are contributing to a 401k, you want to make sure that that is either maxed or done to the right amount that you had selected from the get-go. Capitalizing large asset purchases. So there's the 2,500 rule. If you buy something over 2,500 for the office, including equipment, software, facility improvements, that is a separate depreciated expense than something like a laptop that you can write off on the profit and loss statement. So classifying those things and making sure you have correct records on that is very important. And again, documenting. Keep the receipts, even if you're not keeping the paper receipt, keep it in a drive under the 2025 folder, and just make sure that you have this all ready to go for your accountant for them to make sure that they classify it properly for you. Tidying up receivables and payables. This is a favorite of mine because it really, this one is one of those ones that has a huge weight off of your shoulders when you follow up and get invoices paid if they've been sitting there. I know sometimes it's easy to let it go and you don't want to bother people for money, or you just, it's just one of those things that I'm just not good with collecting money, but it's your money, you've earned it, and it's time to collect on it. So I'm always a big cheerleader for making sure your accounts receivable is as close to zero as possible. Accounts payable too. As much as you're bringing money in, we are also paying it out. So you want to make sure that's as clean as possible too, and that your payables are at as close to zero as possible. If you have outstanding bills for the next month, your accountant might ask for those numbers. So if you know that your rent's going to be a certain amount, your utilities, any big expenses in January, your accountant might write that off in December, like you wrote that check in December. So they might ask you for something like that. You might have to make a small spreadsheet. But knowing your cash flow and knowing what your expenses and how much is coming in is very empowering. So you want to make sure that all of these are very nice and clean. Some bonus tips using technology in separate accounts. I am a big advocate of a software, not Excel sheets if possible. And QuickBooks, FreshBooks, Xero, a lot of them Wave, they make it affordable, not too many frills, but just enough to classify the information for you and categorize it too. And accountants like that, and they like working with that a lot better than they like working on spreadsheets. So I can tell you that for sure. Maintain separation. This is something I really advocate for, and I could probably have a whole separate training on this. I believe, and I've seen it, and I've done it for my own business, when you receive funds, you should separate them. Right when you get them in, you should have an account for profit, you should have an account for operating, you should have an account for taxes at least. So at least 3 accounts. And when you get those deposits in, separate them as they come in so that you know where this money is. You don't want to be caught with a tax bill that's, $10,000, $20,000 and you don't have the funds for it. If you save ahead of time as you're receiving the money in, these are not going to be such big blows to you. You're going to say, oh, okay, yeah, I knew I was going to be taxed on this because I keep good records. I have this money set aside. Here you go, taxman. Or, great, I know my profit was this certain amount. I get this certain amount as a draw every month. Here, it's in this account. I can take this out into my personal account. Again, I really, really like the profit first method and maintaining separate accounts. I think it's the key to a successful business. And especially if you are not so money savvy, it's very easy for somebody to come in and just implement right away into their business. So, and then regular reviews, updating and just looking for little instances in your QuickBooks or in your accounting really does help minimize mistakes in the new year, and spending time or having an accountant do some Sherlock Holmes accounting and looking for issues, or having a bookkeeper try to file through things and find something. If you consistently keep an eye on everything, you'll be fine and you'll be able to know and fix those issues as they come about. All right, so we're ready for a successful new year. We start early in the process. That's why we're already starting here at the end of September and getting organized and maintaining the open communication with your bookkeeper or accountant through the process. They're ready for questions right now, and they'd rather answer them now than later next year. It gets crazy for them, and there's so many people who aren't organized. They'd be more than happy to help you be organized early. Save resources. Just accurate end of bookkeeping saves time, saves money, and prevents those costly headaches. And set up growth. Close the year strong, position your business for strategic growth and success in the year ahead. Okay. All right, and that is my presentation.
Thank you. Ladies, you can turn your microphones back on, because Mary Therese is I wrote some questions down, but I want to hear from anyone else who has some questions.
I have no questions, but that was really informative. I thank you for your tips and your tricks and your time in putting that together. So that was cool.
Yeah. Yeah, I
Charlene,
love talking about this stuff, so I can get real nerdy and techie and fun. It's just fun for me. So if, I'm always here for questions. So if there's anything that pops up or, you can always send me an email. But I'm really a big advocate of knowing your numbers and making them work for you.
I was when you started talking about QuickBooks, I was familiar with it because I actually work part-time and then I'm a business owner the other time. But my part-time job, the owner of my job actually uses QuickBooks, so I'm very like familiar with it and how it
Oh,
works
good.
and all of that good stuff. So it was cool to hear that.
Yeah, those expense categories. Oh, they could be,
Yes.
yeah. It's important though, and it's a great skill to have too. If you end up ever wanting to make extra cash too, knowing QuickBooks, so many people need help in that department.
Mm-hmm.
So,
It's true.
hmm
Charlene, do you have anything?
I have several questions.
Oh, okay. You're on, girl.
If I receive a tip, do I need to claim those tips?
Yeah, that is going to be considered income because it's coming through your point of sale, your POS system. So it has to be recorded somehow, and tips are income.
Hmm. How about Social Security taxes? Are we paying Social Security tax
I am more on
on
the
the income?
Yeah, I'm more on sales tax, and if I'm not a CPA. I'm the middle person between you and the CPA, so I hand them over everything that you've made, and your profit is what they're going to base your income tax off of. And Social Security, whether you have taxes taken out beforehand or not, they would advise you on that.
Can I have multiple LLC business accounts in any of those programs? Or is it just like one user?
Okay, so you can have one user, but you can have multiple LLCs underneath, but you're going to have to pay for each company. So each company has its own profile, one tax ID per profile.
Within those programs?
Right, because you're going to be running, they each have their own checking account or bank account, correct? So yes, you'd run it, QuickBooks has a drop down for each of your companies under your user. And same thing with me.
Out of those, let's say you said FreshBooks, Wave, Zero, and QuickBooks. Out of those four, which one do you think is easier to use for that type of scenario?
I have experience with that in QuickBooks, and
okay.
it makes it pretty easy. I've done it multiple times. Yeah.
Okay.
And they're running specials all the time, and they always have a promo for 3 months free, and they'll have a Black Friday deal. They're always trying to get more. And they run payment processing out of there pretty quickly as well.
Okay. That's all. Those were my questions.
Okay.
I'm going to say cheers to the sanctuary mug.
Yes, I saw that too.
Thank you for bringing yours. I have a few, Mary Therese. Major things as far as changes this year. Did anything like are you worried about anything in particular, or is anything like a little wow that's off, like changes to the code, anything like that concerns you?
It's affecting more on the very, very high income earners. And if you also have just certain machinery and things you can write off on business, like automobiles, that there are some breaks there. They had a whole section now where you get extra tax breaks for offering 401k, especially in the state of New York and federally. So if you have an
That's
option
new.
for that.
That's new.
Yeah,
That one.
yeah,
Okay.
and it's expiring 2026. As long as I know, or as far as I know, that set of tax breaks is expiring in 2026. So if you wanted to get in on it, you would have to get that moving very soon for a 401k contribution. And then it's mainly more on the higher corporate side of the deductions you can take. But
where most of the changes that kind of jump out.
Yeah, yeah.
The uncategorized transactions, I just wanted you to elaborate a little bit on that because I know the categories have to match the tax codes and all of that. So how do you advise on that before they bring their everything to the CPA? Do you say if you have something that you know doesn't fit into a particular category to just keep those uncategorized things together until you get professional help, or like
They want to see it categorized most likely. So if you have a question on it, I would say I would put it in other expense and not miscellaneous. Miscellaneous is a flag, which is like an auditing flag. So you can't put, I try to keep my miscellaneous at 0 altogether, but other expense is a good place to put things that you're not quite sure about. There's an ask my accountant, which is another fancy word for uncategorized, but they're most likely going to put that into other expense if it's not one of the basic standard expenses.
Okay.
Yeah, and just I would say be careful too. It can't be such a high expense. Once it's something substantial, if we're talking thousands of dollars, there's definitely a category for it.
Right.
So if you need to talk to a bookkeeper or an accountant before you do those postings, do it, because it's one thing to have like $120 uncategorized expense or $40, some little guys here or there. But then if you're going to have something huge, you're going to want to make sure that that's categorized properly.
And then I wanted to ask about receipts because with all of this phone, I call it phone nonsense because I hate the idea of having everything on my phone. I'm so old school. Nick's tickets on the phone, this on the phone, that on the phone. So you go to places now and they don't even give receipts. They email them and then maybe they came through or maybe they didn't. It's not like the old days where even if you paid cash, almost always you had some sort of paper receipt. So my question is, as long as you come home and you document exactly what you did, what the amount was, what the purpose was, dates, and all of that, is that sufficient for smaller line items?
I mean, honestly, if you're using a card to pay for these things, that's enough because all you have to do is export that statement into Excel and
But if you're using cash,
you
some
can say
places are cash only, right? Some of these little places are cash only too.
So if you're recording that cash withdrawal, let's say you took $200 out of the ATM, you could split that and say, 40 of it was for postage, 25 of it was for dues and admissions into an event, 30 of it was for meals and entertainment. You can split it up, but you might not have receipts for every single piece of that. Those things are small and few and far between for some people. When it gets to be something very large is where you're going to have some concern for that. But mainly,
you're not usually paying cash for those larger things, though. But I do have cash things that come up here and there for whatever reason, like mailing a book out to a winner or something like that. So it's just the important thing is that you're documenting everything, right?
Yeah, making
when it
sure
comes
that
to
there's a
cash.
split. Yeah.
If you don't happen to have a receipt, it used to be there was a receipt rule, wasn't there? And that's no longer there.
No, there's not time in the day for any of the auditors to go through people's receipts like that anymore. I mean, there's just too much volume, and so they're not going to nitpick over a $200 ATM withdrawal. They're looking for a little bit bigger things like that. But I mean, it is always good practice to know what you took that money out for rather than just saying office expense. You could split it up knowing that you used it for 5 different things on a certain, especially, if you're going to trade shows or something like that, you're using it for supplies and, tickets and all the things, decorations and stuff like that.
Yeah. Okay. And the 2,500 rule, do you want to just, in case folks miss that the first time around, that's anything $2,500 or under?
No, that, yeah. So 2,500 and under is, like you could, I just bought some IKEA furniture for my office. And a lot of times when you buy furniture and fixtures, that's an asset and goes on the balance sheet. But when it's 2,500 and under, you can keep that as a deductible expense on your profit and loss statement and just use it for the year. Um, they consider things like laptops and or again anything under 2,500. I had bought a bunch of shelves that had nice planters on them, and I was able to put those through as a deductible expense for the year.
Okay.
My email address is mt@mtybooks.com.
Okay.
And you can also visit my site, www.mtybooks.com. And I'm happy to chat, especially about this kind of stuff.
And you want everybody to have their 2025 finished, filed
That's a
away,
dream.
even though it hasn't actually been put through yet, so that they can start their new books for January. Yeah, that's very
Get it
important.
done.
I agree.
It's a good feeling to have that stuff in your house in order.
Yes.
Financial house. Yeah.
Yes, that's true. Well, I want to thank you so much for doing this for us. And once this goes out, a lot more people can garner some of the information that you gave us. So, and thank you to those who joined us today, to the guests. And I just want to wish our whole community a wonderful rest of the month of September now that we've charged into the fall season. Thank you so much, Mary Therese. You're just a wealth of information on this, and we loved having you today. So thank you for facilitating.
All right, thank you. I appreciate it and hope to do another one.
Thank you.
All right, bye, Shade.
Bye.
Bye, Tilly.